think, you know, we're going to cover the people, the processes. From a technology perspective, there's a clearer understanding of the potential of data out there today, more so than ever before. And with that, there's all of this urge that we're here talking about. What are we going to do with data analytics? How are we going to get machine learning and AI working? How is it going to use this to give me a competitive advantage in my marketplace? But at the same time, we have regulation, compliance, and all these laws being passed, and they're going to pass this year. I think the US is going to pass their GDPR equivalent pretty soon. That's going to slow down the business who wants to do all this great stuff with data. So finding the right technology that can meet the needs of the business, meet the needs of compliance and regulation to enable that, I think is critical as well.
I'll pivot back to, we may say a lot of the same things here, but I think we're coming from a slightly different lens. I cannot agree more that prioritization and really finding a return on investment. Because I think as you address these business champions, I think there has to be a complete mind shift from the concept. I worked at major banks for close to 20 years. Tech was always seen as a cost center. There is no time more critical than now to actually show that not just agility of data, but it's actually a quality of an asset, not just the intelligence, the data itself, and then how you utilize it to a client outcome. They need to realize that what you're accomplishing within your technology department is a commercial platform to deliver profitability. And I think it's helping them understand that contextual link. I think Josh has done it well, Jared previously, and others we've talked to across some of the family within the community and commercial banking areas has seen that. And I think that helping them understand that mind shift where reducing and collapsing down some of the data supply chain, one, releases the time to value of data from an expense side. And then two, how do you either wish to expose it to stakeholders within your firm, within your walls, to deliver that faster time to value, whether it's coming up from a customer onboarding outcome or even understanding your clients better. So showing them that there can be a profit acceleration through both ends, through technology and the connectivity of how you're delivering services. This is the asset that they need to understand that if they don't do it, we can use all the fancy terms around client retention, revenue acceleration, and growth. This is the differentiation point that's going to be to help them understand that to then make the investment.
I think it's been pretty well said already. For us, you need that executive support to keep things going and keep the lights on. But the word we like to use is our consumers. We're providing now a resource, and that was really when it switched for us. Is when you can put up on our quarterly stats that we were helping produce deposits. We're helping drive the business, and I think that's. You said tech people, that's pretty awesome because usually you're just a cost center. So
how much what's putting in the budget?
Yeah. Oh. Yeah. We still get that every once in a while. It's usually folks that are stuck in the 1900s. But yeah, I think once you can start showing the value that you bring, you have consumers that want what you have, that you provide. It just changes everybody's mindset. So that's a big step forward.
And then I will speak to data modernization through cloud migration. Naturally, it's the cloud guy, I don't talk about cloud. But the benefits of migrating to the cloud, specific to data, security is the #1 thing. The accessibility of the data, the accessibility of the data, the disaster and the recovery, the agility, which Jimmy spoke of. There are just so many, the costs, which I know is particularly important for a credit union or a smaller bank. So all very important aspects of migrating to the cloud, and the implications for the data are incredible.
So when you look at the landscape today for financial services institutions, especially regional banks and credit unions, what are some of the unique challenges and opportunities that you see, kind of with the eye to why embrace data estate modernization today? Partner.
Yeah, so I would say, so personally, it's user experience, it's customer experience. So we talk a lot about Customer 360, which seems to be at the forefront of a lot of organizations right now. So that is something I've experienced personally, but professionally, the demand for the right customer experience and the impact that can have is amazing. So the customer experience, understanding churn rate, understanding retention, using analytics to be fully transparent to your customers, and ultimately having a goal around maximizing the customer experience. I think Josh, you said it earlier, the impact to deposits and to the health of the bank and the bottom line is just incredible.
So I have some personal experience with this one. My mother and my stepfather are both CEOs of fairly large credit unions. And I remember the days going into the basement of these credit unions, and there was the computers and the servers down the server room, the wires everywhere. When the cloud came, and we're talking about AWS, Snowflake, their minds just couldn't handle it. It was very challenging. It was very, what I'm looking for, it was intimidating for them. So it was time for them to retire. So not having the right partner like a Passerelle, if they had Passerelle or something like that, choosing the right partner would have helped them see the vision, see the capabilities going through that. So they had smaller teams that weren't very tech savvy, but with the right partners and stuff, they were able to. They could have been able to move forward. So it was time for them to retire anyway. But they were. I remember them telling me about this. Like they're like, this was very scary stuff for us. So I think this, doing that migration to the cloud, using new technology that they maybe didn't learn in school was a challenging part.
Yeah, I'll add to that too. That the legacy technology debt and the legacy tech stack that many financial institutions have, and the providers that we've all traditionally had, are one of the biggest barriers, and was candidly one of the bane of my existence. Is when I was still working for the banker credit union, being able to put together and patchwork the lack of integrations that existed between these systems, make sense of the data with lack of data dictionaries. All of these things are hurdles that are very difficult, challenging for small data teams, small organizations to overcome, given the tech and data sprawl that these organizations have built over several years and decades of use. When you combine that with some of the cultural challenges that also exist, both from a strategy standpoint, talent development, and the stuck in the we've always done it this way, right, kind of mentality that you have to overcome within a community financial organization, and be that champion and that advocate to move forward. Because candidly, I think one of the real challenges that institutions have to face today is that doing it the way that we've always done is no longer sufficient. I mean, there's a real need, as the erosion of our ecosystem continues to accelerate, both from a fintech and customer experience perspective. Being able to leverage your data above and beyond just the reports and analytics and dashboards, and really make sure that you're driving initiatives and customer experiences, retention, cross-sell, in every channel and every way imaginable, and at least testing it and going down that path is paramount, right? So these are the things that I do believe are some of the biggest hurdles that, again, institutions, and particularly C-suites and CEOs of these institutions, need to be educated on more.
This will not surprise anyone in the room. I'll say it anyways. Money is no longer free. So it's a big challenge, right? This is something many people aren't thinking about, right? The persistence of inflation and high interest rates, that should be great for banks. But for budgets, typically not great, right? Obviously, people thinking about innovation in a time of tremendous uncertainty, walking out of a pandemic. How do you meet all of these great words that we're using up here on customer experience and everything else with a demographic that's rapidly changing? And I think at the same time, competition that comes from, especially for the folks in this room, from all angles, right? It comes from fear factors of JP Morgan spending $15 billion a year on tech. Half of that goes to putting new innovative things, and half of it goes to keeping the lights on. And then the other half is thinking about, I have 4 kids. Most of them don't care what it says in the name of the bank. How do you provide experiences via digital, via mobile, that they can resonate with, so it gives them that same user experience? So I think it's harnessing some of that idea of unifying some of the thoughts we've had here around focusing on, during this time of uncertainty, how we can utilize data to make that better data-driven decision-making, to prioritize around connecting with clients and then protecting the bank and moving forward. I think Josh has given a lot of the seeds to grow and make that much more effective. But I think this is just something to set the table on the reality of why now the cost of inaction is high. And I think this is where I think some of that, creating that data foundation is going to absolutely pay yields and dividends for the most critical use cases that would be meaningful to these banks.
I think simply it's survivability. When you look at everything that's going on and you talk about uncertainty, interest rate, compression, world affairs, the thing that always wins is speed. And if you can beat other people to the opportunity, you have a chance to survive longer, get a little bit ahead. I think that's why it's critical. It's not. I don't think it's an option. I think you have to do it. And those that succeed at it will continue to grow, and those that don't are going to be a tough spot.
I was kind of counting on you to end on it. I know.
The answers are coming next.
Okay. So Josh, you talked a lot about use case-based and agile deployment, and that's something that Passerelle really leans into is use case-based deployment and aligning use cases with business value and return on investment. So as you look at the technologies that you are here representing, what would you recommend as a high impact, low lift, first use case for getting started with your technology? And we start with that.
That's an easy one. You just mentioned speed. The opportunity is always going to win. We're cloud native. You can sign up for free today, right now. At the time it took you to watch us talk about this, you can already sign up right now on our website. Go to Snowflake Partner Connect. We're up and running. You can, if you're in a POC looking at something else, you can probably beat that POC time to value.
And do you want to really quickly outline what Alter is?
Yeah, Alter, we're a data security platform. You can find us in the Gartner Market Data Security Platform Market Guide. We provide access controls, data protection at runtime and at rest, data classification, you can get the tags in Snowflake, and automate your policies with no code throughout your Snowflake platform. I mean, some of the biggest things that our customers like is not only that, but the real-time observability and auditing that comes with the policies that we generate automatically. There's things, the most advanced stuff that we use in native Snowflake capabilities that your do-it-yourself teams won't ever really think about or even try doing. It's kind of really there's a lot of that in there. So that was all.
Yeah, no, and before I talk about use case, I'll just say that from Passerelle's perspective and my personal perspective, from a data governance view, we're huge fans of the Alter platform. Enormously useful, easy to use, administer tool at a low cost point. And we were talking earlier about the CAT exam, right? If you're looking to improve your security and regulatory posture from a data accessibility standpoint, Alter is a tool that will immediately pay dividends in that area for you. But specific to the use case question, every institution is different, both from a strategy, culture, and problem issue standpoint. And at the risk of again staying in the weeds and not necessarily advocating for any individual piece of technology that's here, something that you could do today if you haven't considered, right? That could provide immediate dividends given the market that we're in and the liquidity concerns and the deposit acquisition concerns. Go and look at your previous mortgage and loan applications over the past couple of years and look for opportunities where either applications that were funded or are still in the queue, and look for available assets from that were communicated as part of those applications for both the primary borrower and the co-borrower, right? So there are opportunities there for you to mine and look for sources of funds that are not going to be found in your core, and they're not going to be necessarily found in your loan originations and in your loan servicing platform. They're going to be in your loan origination system. So whether or not you're able to get to that data in a tabular format, or if you wanted to use a potential large language model, again, not a big lift, or not looking to make it a big lift, but being able to mine that information and look for those that are who applied and have assets whether it's stocks, bonds, mutual funds, or other, that you could potentially reach out to those customers is an area that we're seeing other institutions start to tap into for sources of funds and deposit acquisition.
This will be more cheery, I promise. So the challenges are real, right? So from a use case standpoint, and I'm lucky enough to get to see what JP gets to do down to the smallest credit unions around. So I think holistically, let's abstract it back. There is a protect and connect strategy. So where should you start? We can choose one, but I really think it goes back to return on investment, right? What is your data state? What is the fastest time to lift to the priority of the bank? So we are seeing tremendous amounts of work in risk and regulatory work. Okay, I'll use the framework of liquidity, and I'll use liquidity coverage ratio. But after we saw post-SVB, everybody, whether it's the largest banks or the smallest banks, are trying to understand on an intraday basis their highly liquid assets relative to deposits. Whether that's going to come from a Fed or an FDIC audit, or it's going to come from the concept that you just want to be able to have protection so you have confidence when you're reaching out to your customers. And then the second lens on the connect side is absolutely you can take customer experience, but it's really understanding your client footprint, a better onboarding experience, and then last but not least, yes, of course, a cross-sell and upsell. How are you householding? And I think this is where you then can take to that next leap. Maybe this is version 3.0 or 4.0, but this is where it needs to go is to compete, there is some of that hyper-personalization. How can you make what you're bringing out to your customers to retain them personalized to them, right? Like I said, I have 4 kids, I have 3 brothers, and my parents are now 80. We're all using digital banking on some level. My parents are still at Winchester Savings Bank, probably about 20 miles from me, right? My kids use any application that somebody had given them to utilize their money, right? I think it's being able to bridge the gap between either fintech partnerships and how you wish to then grow and accelerate your business, leverage on that foundation of data to protect the bank or connect better with your clients. Those are the use cases, but then again, each one discreetly of the folks in this room will have their own choice and where you want to prioritize that first based upon your strategy and the program.
So with my prior mention of customer experience as a potential challenge, I see an opportunity. So that is probably the use case that I would grab right away, and I would think, Jimmy mentioned personalization, certainly an opportunity there, but the power of the analytics to drive a better customer experience with some of the things I mentioned earlier, such as understanding churn and retention, and also the generational differences on appealing to the various generations. Jimmy mentioned his 4 kids. I've got 4 kids. They all have very, very different expectations and ways that they use and manage their money. So completely agree with that. I think customer experience is what we're through.
Can I say something positive?
Yeah. Was that positive?
Well, I think the positive spin on that is the solutions are all up here. So it's not like it's something that we have to figure out or unlock. But we have done something using the solutions that these folks have built, their companies have built, and it's easily accessible. It's just kind of overcoming those internal conversations and getting people on board. But the good news is, no matter how big or how small you are, this will work.
What about just lowest lift?
Lowest lift.
Yeah.
I think I'll go back to speed again. The win for us was we had a problem we had to solve with a quick turnaround, which was going to cost us a lot of money if we were unable to. We were able to ingest data, make a quick turnaround. So I think just having the tool set that is easily available that you probably don't have today. Like I said, it was going to be a 10-person job a couple of weeks, or we just used Snowflake. Did the trick.
Just positively, we are seeing absolutely tremendous amounts of acceleration. Biggest banks to, could be 9,000 banks, could be bank number 5,000. It's that personalized marketing and marketing optimization around the data. It's universal. I think there's a heavy amount of ROI on that use case, understanding clients for the retention, churn that Carter was talking about without a doubt.
So I would just ask everyone, what do you think is the most impressive metric that you see up here, and why? And Josh, start with you. Which is your, if you had to pick a favorite.
It's like picking your favorite child.
Yeah.
I guess I'll go with the efficiency because we'll go back to this is a chance to develop people, give them a career. And I think that's something that if you're in a financial institution, traditionally technology hasn't always been sexy, but now it can be. And there's what we were able to do is get rid of the old school, keep the lights on work, and open it up to something fun and exciting. And I've been able to give. Yes, we're a sizable bank. We're still Mid-Coast Maine, and we've got 4 people from Mid-Coast Maine that now have careers. So that's been pretty exciting.
Yeah, I'm going to be selfish and choose 2, so forgive me here. What I truly like is the words have been used earlier. You can choose agile or scalable data architecture, which leads to business growth. This is the messaging, again, the direct line of auditability, of tech scalability, and releasing your assets for actual true business outcome, and being able to draw that back to show that scale and agility to not only help you understand your customers better, protect the risk of the bank and the brand, because again, in banking, it's all about foundational, about trust, right? So the words they need to understand is that if 1, don't lose money, 2, don't get your name in the newspaper for something bad, and if you forget number 3, read 1 and 2 again. Right? And I believe that scalable data architecture with agile ways of working that enables business growth on a tremendous foundation. People are not going to want to take their money away from your bank. It will draw more money in.
I'm going to go with the operational efficiency. The numbers there are great. Saving, you may read that as maybe 7 people got lost their job. I read it as people are doing more important things in these repeatable steps that very talented folks may not want to do all day long, or are now able to do things that are more interesting to them with new technology. So saving 1,500 hours of work and over 7 FTEs, I think that's great. The opportunity cost there is probably tremendous.
I'm going to be unique and say operational efficiency because automation really resonates with me. And I think automation, and not surprising coming from AWS, but automation can create quality, predictability. There's just so many positives to it, and the fact that you were able to save 1,500 hours and the 7 FTEs is just profound.
Yeah, I'm going to join the chorus as well. Well, the majority of my career was spent in driving growth, right, and marketing and using analytics to innovate. Ultimately, I know how hard it is to create that paradigm shift in an organization like Camden, to be able to move the view and the concept of technology of being a cost center to a value creator, right, and being able to provide careers, in Josh's words, for folks there and giving them higher value opportunities to develop, and again, to be able to attribute that to his team and moving the institution forward is nothing to sniff at. I mean, that is phenomenal, and something that really hits home for me as part of understanding and learning and talking to Josh more and more about this. That's what really stands out.
So maybe I'll just do a quick, we'll turn it to the crowd here and we'll do a show of hands. Who thinks that the democratization of data, self-service at scale with 140 digital analytics is that anybody's favorite? All right, we got the Snowflake team checking in on self-service at scale. Agile data governance reclaiming 70, is it 70 terabytes or 80?
Yeah, 70 now.
Yeah, with 5 data marks that are holding 80% of mixed data. Soon to be 95. So, business growth, 1 data match. Operational efficiency. And that scalable data architecture that's really able to grow with new data sources and new analytics. See, you raised your hand. Right?
I want to fight is not illegal.
All right. Well, that's that. Those are the. And with my questions to the panel. So, do we have any questions from our group here for this esteemed group of experts?
Yeah, I think what was called out was like personalization and potential stronger customer 360 by tapping into maybe more alternative data sets that Josh, you call out, maybe like the registry of deeds, or double clicking into some of those mortgage loans, just maybe less traditional data sets to be able to source now that things are more accessible with the likes of Snowflake. And would be curious to the group, like, where do you think some of the most interesting or exciting, maybe alternative data sources that could play into the current banking space?
I'll say one that we captured recently, address. So address information, census, again with this platform with the Qlik talent and Snowflake, it's so easy. I mean, we can go to their site. If some, obviously have to pay for it, but there are others that are free data sources. Census.gov, where you pull in, it's by zip code. So you pull in zip code, income, age. You can quickly segment the customer base. Whether you're a customer, you can match it up with your customers. You can get new potential customers. And then we've been doing something recently where we're mapping using lat long to say how far is our customer base to our branch. So we can start to get a visualization of how far away folks are and where's the best place to put your next branch.
And do you use the Snowflake Marketplace for this? Yeah. And so do you want to kind of explain the experience of using Snowflake Marketplace to get new data into your Snowflake?
I'll just say it's super easy. I mean, to be able to go, for anybody that's worked in this field for a while, it's sometimes difficult trying to clean data and get it in, and it's just so easy now. I tell my team I'm so jealous of the tool sets that they have, and then with Snowflake, with the marketplace, just being able to pull it in, and it's easily digestible. Again, it sounds like I'm a hype man for Snowflake and talent, but I mean, it's real. It's
when we talk to our other financial services clients, I think it's the difference between getting data sets in before and after is just so different. Like you click a button, which I'm looking reading about, means that you're using the exact data that you want. It's the exact zip code that you want. So that there's just what you need and nothing else.
It's reliable.
Yeah.
You've got a good clean data set.
Yeah, I'll come at this from another angle to answer the question. Is that banks and credit unions are in a unique position in having some of the most informative and rich data at their fingertips on their clients via the transactions that they make on their checking account, in terms of really providing some insight in terms of their personal preferences, their shopping behaviors, etc. So, from a transaction categorization enrichment perspective, there's a whole market out there, and we have partners that we bring to the table for our clients to assist in basically creating really deep, enriched contextual insights about the customer base for the institution, and they can then be used in any number of channels and any number of integrations off of that data set. I also think one of the bigger moves that's happened over the last couple of years that is going to assist institutions going forward from that hyper-personalization standpoint is the proliferation of the composable market, right? So these tools, which come to the table with the integration work already done, right? So now you're talking about being able to sync audiences multi-channel, out in the cloud, all the social media providers with data at rest, right? So now you're not concerned about what data elements need to be pushed to each individual channel, and you're moving data kind of, again, on a scheduled or ad hoc basis. Now you've got actual tools that can sit on top of your single version of truth in Snowflake, sync your audiences, to all of them. You're orchestrating the journey from within, again, a very thin UI that sits there, and you can measure results in real time across those multi-channels by being able to set goals and capabilities. So again, I think the path here for going further down this path and providing that hyper-personalization that the average consumer truly now expects, that Amazon Netflix experience, whatever you want to call it, is doable, it is attainable with some new tools that, again, and the data enrichment that I talked
Cut through, Jack raised a good point. Loads of geospatial work that's being done and utilized by banks. I'll shift focus a little bit to insurance, but also banking in the lending sense. Lots of weather data, right? People are absolutely using satellite imagery. People are looking at claims and other pieces as they start to look at their first of all, their own credit portfolio and making lending decisions. One thing that hasn't gotten lower, we look at disinflation happening. One that isn't going lower is the cost of home insurance for anyone, right? So I think these are the types of things as where's the primary source of money for any banks in this room is deposits, lending, cards, making the risk decisions on those and utilizing these other alternative data sets to help understand your portfolio, but even actually on the understanding the valuation of the asset you're potentially going to underwrite, also the quality, to Greg's point about the quality of data you have within your walls to make the credit decision on the human being or company that you're willing to lend to. Lots of tools there, lots of easy ways to ingest. Last thing I do want to mention is with cookie deprecation that has gone on, what I want to say is that this is something that came to me yesterday, so I'm not going to pretend like I'm smart. I was told to me by a colleague who's now joining from a very large bank. As that cookie deprecation has gone into effect, the quality and the data that you have, not just transactions, but also the first-party data that has been given to you to understand your clients, you no longer have to put that outside your walls to an Axiom or other people. Again, all are great companies, but you have much more power than you think you do now of that data, as long as you can reconcile and bring it to one place, right? So I think that's going to allow you to expose, and you have some great IP. The question is, what do you wish to do with it? It's just something not to forget, as that world of former, however, did identity resolution and authentication is now in the power of your hands.
You said cookie, now I'm just thinking about cookies.
Yes.
I know we're talking about it. But any other questions from the audience?
Yeah, I think it's actually kind of surprising that AI and ML has only come one time. So good job, guys. Thank you.
I brought it up and Josh shut it down. So.
That's right.
So we go there?
Okay, we can.
Yeah,
The question, I think.
the question for Judy is, I'm just curious because you're working with so many different sizes of banks, different regions of banks. What are you seeing for use cases for AI and ML these days?
Sure. I think Mona already has the answers. We were talking at lunch. Financial services is a business of explainability. You can't just willy-nilly do anything. I am not aware of any place where Gen AI is running end-to-end, meaning data is being ingested out to a customer output without human oversight. It's not happening because it can't. At some level, from a legal standpoint, I just can't see how that's happening. So what I am seeing is lots of work. Well, first of all, is there data readiness? I'm not sure that everyone has that piece to really go end-to-end. But what I am seeing is the attempt to automate things and to augment employee work. Call center, analytics, histories of call data, transcription, recommendations to call center reps to then solve the problem more quickly, in conjunction with, if you have the data there, to look at historical price transactional data, customer footprint analysis, then to make a next best action. So hopefully the idea is to bring this together in a package. Recommendations to solve the call problem faster, why someone is calling me with a human being faster. And then two, once you've resolved the customer, you have an opportunity then to cross-sell and upsell. You have the opportunity to understand, based upon their transaction history, okay, they have 3 products. Maybe you can have a social feed that comes in that shows they just have a child. Maybe they have a checking account, a savings account, or a credit card. Maybe they can be offered a mortgage. Maybe that's something that's present to them that they're thinking about. Those are the types of things that are being done. Wealth and asset management businesses are absolutely augmenting and making recommendations to their advisors to then make better decision making. It's not going end to end. There's a human being at the end of this to make recommendations. Bigger banks, there's lots of code transformation going on, right? Loads of code transformation where they're trying to take, accelerate some of their legacy tech debt by rewriting code utilizing Gen AI tools. Those are some of the ways. There's a whole list of other things. Fraud. We can keep going and going, but I think what I told Mona was hype cycles. Innings. Let's use baseball as the analogy. I think we're in inning 2. Okay. All the original hype, with interest rates staying high, is dying down. What am I tangibly doing to get a return on the investment, both in productivity or to a revenue outcome? Collapsing the time that it takes, again, for a customer when they call in, right, to solve the problem. That is where we are now. I think people are doing a lot of really cool things around OCR and natural language processing, ability to make recommendations. We have a product called Document AI. I really think that's where people started to take unifying what is existing out in the corpus of the world that people can scrub off of websites. All those foundational models, I think, are going to regress, right, back to the same answers on some level. But what the differentiation is going to be back to the intellectual property within the walls of each individual bank in this room, in your ability to access paper PDFs and other documentation with subject matter expertise of the risk of your firm, of how you wish to approach your customers, leveraging that in a secure, governed way with choice of models. We don't know which next model is going to help solve credit analytics better, but what we do know is you can use foundational models then to direct to your corpus of intellectual property that you protect to an outcome more quickly using these tools, but under your choice, and knowing that everything's going to continually be changing, you need to have a corpus of choice. ChatGPT-4 may be the best thing since sliced bread now, but we have to put that under the lens of cost. Maybe it gives you an answer that gives you 90% certainty, but there's another model that runs at 88% certainty that is 10 times cheaper. For that 2%, you may have a decision on which model you want to use. So I think this is the corpus of some of what's going to be happening. What is happening now versus what I think may come. Again, it's one person's opinion, but I think we just want to provide you, again, a secure governed data state to then hopefully provide a profitability outcome of your intellectual property to your clients or your stakeholders internally with choice of tools, whether it's Amazon's Bedrock model, or it's Mistral, or it's Llama 2 or Llama 3 or Llama 85 by the time it gets there. Whatever the answers are, we just want you to have choice of the models that you think is best to meet your business goals, if that helps.
And if it sounds intimidating, it's because it is. And it's just, there are so many, there are 100 probably tools that just came on the market today. So that's one thing that our team is really excited about at Passerelle is taking our financial services data and identifying use cases with, Greg said, I don't know if you mentioned this, but he spent 20 years in banks and credit unions. He has the expertise, he knows what he would be looking for. So we're taking that, we're using the Qlik ML tool, we're using the SafeMaker, we're looking at all the options and running through these scenarios, and our engineers are so excited. This is going to be exciting, and it's just getting started. So it's really exciting. The great thing about having all your data in Snowflake is once you find the tool, you just put it up there and you're ready to go.
Yeah, go ahead. I got you one question, I'll let you kill it. So the last piece is that people, let's abstract really what is Gen AI in the first place. It is breaking down the communication barrier between humans and machines. Let's stop there for a second. Because so much times Gen AI, it has this older corpus of risks and opportunities, but at its most fundamental level, you don't have to write code to get an answer back from a machine. Exceptionally powerful and awesome. And the last piece is like this, just again, the data readiness of an accurate set of data to utilize these tools is more important than anything else. Gen AI and AI and all this data we're talking about, you can't run a car using water, right? You have to have gasoline. Your data and your IP is the gasoline to fuel, hopefully with accurate and really powerful gasoline into an engine that scales really well. The steering wheel could be a model. That's the way I like to break this down, right? I think that's where we have to start thinking about it. The power's in your control and what you get to choose.
Yeah, I'll just add, Sean, to Carolyn's point, that we have a working prototype today of large language models on top of data in Snowflake, our synthetic deposit data, to allow for asking questions directly relating to multiple time periods, deposit analytics, et cetera. Our next step will be to combine that with unstructured data in both PDFs, fake loan applications, as well as audio calls transcripts, to be able to mix and mingle that unstructured data with this tabular customer structured information. Case in point, or use case, right, is how many people called last week to complain about our debit card outage, and how many of them closed their account today, right? So being able to correlate feedback and information that comes from and stored in an unstructured format with the tabular customer information, and have the ability for an end user to ask a question naturally in the way that they want to ask and get an intelligent response back, right? So because my belief, my vision going forward is that not everything that is going to be built needs to be a dashboard or a report. You've heard me say that before, right? So there has to be getting this quality information into the end consumer's hands and doing it in an efficient, trusted, well-governed, fine-tuned manner is going to create better efficiencies for our organization going forward. where you don't have to go through a line creating a